We're going to get right to our guest on set, Jameel Ahmad, Chief Market Analyst at ForexTime. Now today, the ringgit hitting 382. Is history repeating itself?
It is. Thank you very much for having me, and it's nice to see you again, Sophie. This is history repeating itself from what exactly happened earlier in the year. I mean, there's a combination of different factors right now that are weakening the ringgit, and this includes anticipation that the Federal Reserve about to raise interest rates, resume selling the price of commodities. There's concerns over China, and this is consequently leading to further selling of commodities. So there are strong downside pressures on the ringgit at present.
And the FOMC decision due out this week. What, if anything, that could be communicated by Fed Governor Yellen? What could be upside for the ringgit?
Okay, so basically the strongest possibilities for the ringgit right now would be if the Federal Reserve remain hesitant towards raising interest rates. Now, personally, I do think they're going to go ahead in September. And also, even if the ringgit did gain in the short term, basically because the Federal Reserve are being hesitant and this would encourage some dollar profit taken, the Federal Reserve are going to raise interest rates is inevitable. So it would lead to this pressure returning maybe a bit later on. I mean, right now, what I'm really looking at is to resume selling in commodities. If the price is going to find a floor, where exactly is this going to be, and also how the recent data from China impacts the emerging markets and what consequence this has on the Malaysian economy.
Yeah, the commodity rout is deepening. China's stocks tanking today. So as you say, this mix of factors not looking too good for the ringgit.
This is right. This is why the investor sentiment towards the Malaysian economy is right now being dragged by all different directions. I mean, this is no longer about the Federal Reserve raising interest rates, which it was when I was back in Malaysia in April. Now there's a combination of different factors. I mean, the problem with the China markets is that if this reflects on investor sentiment generally towards emerging markets, I mean, personally, okay, we know the government target 7% for China is crucial. This is the benchmark that the Beijing government have set in public. But the China economy can handle softer growth if needs be. But those economies that are reliant on trade with China, they can't soften the force so much.
What then is the outlook for the ringgit given those factors?
We're looking at continuous pressure. I mean, basically the short-term gains would be if the Federal Reserve remain hesitant towards raising interest rates, but with the price of commodities looking bleak and these China risk in the markets, I do think that the likelihood is that we're going to hit a further milestone low.
And we're going to weaken further in the ringgit.
I think so.
And by the end of the year, could we be seeing 4?
I think the Federal Reserve would have to be hawkish, and the selling in commodities would have to extend much further than the low previously seen at $42. I mean, 4's still some way off, but we are looking at another milestone low. I mean, I'm not surprised we hit one today. And if the price of oil continues to decline overnight and this weighs on the overall market sentiment, we're probably going to hit another low this week.
Now, folded into what's happening around the external space, there's also the domestic space to consider, the 1MDB story, for example, and the pressure that may place on the ringgit.
Yeah, I mean, this is just a further weight on investor sentiment, mainly because it can reflect on confidence when it comes to investing in Malaysia. But right now, what is really important to focus on is the price in commodities.
What options are there then to support the currency?
I mean, this is a really popular topic. I mean, we look at what Indonesia did last week. The government promoted placing higher taxes on imports. And currency intervention is a very popular topic to bring up here. But yes, the problem is that when a central bank admits that it's intervening in the markets, it places continuous pressure on the central bank to continue doing so. I mean, look at what happened in Russia towards the end of last year. Once the markets found out that the Central Bank of Russia were intervening on a regular basis, they began pricing in further weakness. I mean, again, even if the central bank does act and ease monetary policy, there is a risk that this would spook investors off further and actually backfire.
Now, we are seeing Malaysia's reserves being drawn down even further, implying that Bank Negara is defending the currency. So are we going to see more of that perhaps weigh on investor sentiment?
I think that right now it would be more if the central bank came out and said, we are concerned about the ringgit and we need to act to defend it. I think that's what would weigh on investor sentiment. I mean, right now we don't know for sure if they are intervening. It's just that these reports are emerging that it's looking like the case.
All right, and given what's happening, where are you seeing any trading opportunity in the currency market?
Now's a very exciting time to trade. I mean, basically, one thing that I'm pointing out continuously in my market reports is in relation to the euro dollar. Now, I personally see the 110 area as a huge psychological level. And basically, for those who are looking towards the euro dollar weakening, what you really need to look for is to close again below 110. Now, once we close below 110, this is what's going to lead to further declines likely down the charts. I mean, 2 weeks ago, we hit 108. I mean, I see the euro is bouncing again today. I think we're up towards nearly 111. But really, for the euro to extend its gains further, we need to close above 110 today. I mean, it's not just this. Sell-on rallies is a very popular trade in the sterling dollar right now. I think that although the UK economic sentiment is very bright, this attracts investors towards the pound. The Bank of England is still a long time away from raising interest rates, and this is again one of the consequences towards commodity prices because this extends the disinflation risks. So for as long as the Bank of England are not going to raise interest rates, I also see pound dollar gains as being capped and limited.
All right, some opportunities there amid all the volatility. Thank you so much, Jameel, for joining us around the table. You got to come back on your next trip. And that was Jameel Ahmad, Chief Market Analyst at ForexTime.